Bloomberg, I was reading an article this morning saying that talking about all the downturn and the landscape is going to be terrible this year for real estate. And you know what? Maybe we're obviously very centralized in Ottawa, but maybe across Canada that is accurate. But being the Ottawa Real Estate Podcast, obviously we're delivering Ottawa news, and it's shaping up in Ottawa to be another busy year. So buckle up and get your offers in.
You're listening to the Ottawa Real Estate Podcast with your hosts, Paul Stevenson, David Warren, and Greg Campbell. Let's see what's going on in the world of real estate today.
Yes. Hello, everyone. Welcome.
Yes.
Welcome to the Ottawa Real Estate Podcast, which is produced and directed from Ottawa. Based out of Ottawa. I'm joined. My name's Paul.
The hosts.
Yeah, the hosts everywhere, all the time. My name is Paul Stevenson. I am a mortgage agent, and I'm here with Greg Campbell, realtor and managing director at The Agency Ottawa. The Agency. Haven't done that in a few weeks, actually. And David Warren, mortgage agent and owner at Referral Mortgages. Gentlemen, how are we doing? End of January.
I can't believe it's already end of January. It's ridiculous.
Yep, neither can I.
Couldn't
believe when it was New Year's Day.
I
now
know.
It's the end of January.
So we're a month in. How do you guys feel that the market is shaping up compared to what we expected at the beginning of the winter?
So I'll speak from my side for this week before Greg gets into numbers or what he's seeing, just more kind of anecdotally. I'm seeing a lot more activity of people wanting to be getting pre-approved this last couple of weeks. Purchases, even waking up this morning to purchase agreements from buyers from yesterday. I think that it is picking up, and I think it will shape up like we were talking about weeks ago. I think it will be a busier spring than people anticipated.
I think we kind of anticipated it. Or
We did.
Talked about it anyways.
But-
a lot of people.
But
didn't,
Globe and Mail
some
and
people-
and this Ottawa Citizen does not.
Yeah, and some of our listeners did not either approve.
I saw actually an article on Bloomberg today
Statements that we say.
talking
Sorry?
about Bloomberg. I was reading an article this morning saying that talking about all the downturn and the landscape is going to be terrible this year for real estate. And you know what? Maybe we're obviously very centralized in Ottawa, but maybe across Canada that is accurate. But being the Ottawa Real Estate Podcast, obviously we're delivering Ottawa news, and it's shaping up in Ottawa to be another busy year. So buckle up and get your offers in. And it's
Buckle
funny
up for sure.
every time we say that, every time we talk on the show about things are heating up and get your offers in, it's always we're looking out for ourselves and we're trying to hold up the market and get people excited. But I mean, we're literally spitting fact. We're not like, there's no benefit to us saying it's busy if it isn't. Like, it's not going to make people then go out and buy. But it is our duty, I feel like, as professionals, to advise people as to where the market sits. And if it is a good time to buy, which it is right now, with prices still being temporarily lower than they were a year ago, I think it's our responsibility to explain that to people. And if they're currently shopping, to potentially get in sooner than later so that they can take advantage of the likely uptick this year in Ottawa.
Your comment about that, I would say, is also there's proposed changes by OFSI that they announced beginning of January that they're doing a consultation on. OFSI is the Office of Financial Services. They are looking at restricting qualifying rates for individuals on uninsured mortgages. So people putting more than 20% down. They even spoke about that the default rates in Canada, or people current on their mortgage, is at 99.86% of Canadians are current on their mortgage, meaning like outrageously low default rates still.
Mm-hmm.
But that they are proposing, they're doing a period right now until April 1st, 2023, getting feedback from the mortgage industry, banks, mortgage professionals, proposed changes to restricting debt servicing, meaning, kind of they're looking at likely a multiple of 4 times your income instead of just the GDS, TDS calculation. So that as well will limit what people can buy on their own. And I think that will, again, that's April 1st that they're doing consultations still. And every time they've said this on any other rule changes, they do, they're already going to make a change. It's just a matter of to what degree. So I think, certainly based on that as well, that there will be changes later this year to restrict people's qualifying, similar to 2018, and they brought in the stress test and all that. It would be wise for people listening to maybe consider buying if they're thinking of buying maybe in that spring time frame instead of later on in the summer, because we don't know what those changes are going to be.
Very interesting to hear. That's probably going to be big news in the next couple of months.
Yeah,
stress tests don't work. Let's just change the rules. We'll change the rules of the game, and just
classic.
Yeah,
yeah. I mean, we saw it in 2018. People, didn't after those rule changes in 2018, bringing the stress test. Home values actually increased incrementally quicker than prior. People just get, it just means bringing on a sibling or a parent on as a co-signer, basically, or having more people on is what ended up happening after the 2018 changes. But, again, when people want to buy a house, they will. And especially here in Ottawa, where, again, like we always talk about of incomes being so strong that, likely won't impact our immediate market as much, but it is something to be cognizant of if you're on the cusp of what you qualify for now. And you're kind of worried and you are wanting to buy this year, it's something to maybe think about or keep in the back of your mind, and keep a pulse on when those changes might come into effect to get in sooner rather than later. So
speaking of changes, we saw last week, we were kind of alluding to potential increases from the Bank of Canada, and we saw that. So we did see rates increase by 25 basis points, which is what we were kind of expecting. I think everyone was kind of expecting, 0.25% to 0.5%. Happy to see it was a quarter and not a half. How do you guys see this impacting the current market? And I can give my feedback as well after you guys.
Yeah, the rates. I mean, it hasn't affected anything in my business as of yet. No one's really talked about it because everyone that's been approved is getting approved, is used to their current rates, and they're just like, oh, there's a rate increase, whatever. What's my new, what do I need to do? What do I need to do? No one's like up in arms, like it's a disaster. So it's kind of, it's interesting to see, but the thing that I want to make sure that everybody is clear on, that the prices are down. The prices may continue to trend down. Based on the statistics that I'm doing, the prices are still trending down, but I'm seeing more multiple offers than ever anticipated. And everyone needs to be aware of that. Now, the multiple offers are happening on nice properties. We've said this a million times. Properties that are nice and they're priced well, and they're not selling for like 50, 100, 150 over. They're selling for like, 10, 20 over. And sometimes they're selling over with conditions. So it's just something I want everyone to be prepared for. If you see that home that you really like at $450,000 and think that you're, wow, I'm gonna get a deal. Well, there's another 10 of you potentially that are seeing the same thing. Flip side of that, I have an interesting experience last week. We were looking for Luca and I. We do these property tours for Reels for Instagram, just to showcase other agents' homes, do a collaborative approach to promoting properties and promoting our business. And when we were looking for new homes to shoot, let's say I'm looking in a suburban neighborhood and there's 20 listings for sale. And in each suburb that I looked at for that specific type of property, out of those 20 for sale, 15 of them were vacant. 3 of them were tenant occupied, and maybe 2 of them were owner occupied. And that was something, and I don't know if that's just an anomaly because it was one day that I went online, but I was Barhaven, Kanata, and Orleans. And all of those neighborhoods, like basically 75% of the listings that I looked at were vacant. So for us, and we're trying to go showcase a home that's like, maybe beautifully staged, or the homeowner, like pride of ownership in the house, but all these homes are empty. So that was surprising because I didn't think I would see it be that high. Like when I started seeing vacant, I was like, wow. So I'm seeing all these vacant homes and I'm sitting here wondering, like, you know, they've already dropped in price. They understand that they missed the market. They've dropped in price because they had a property to move into, which is why they're vacant. So now they're in a position where the seller, you know, they want to sell. They may have borrowed more against the home that they should have at the time. But of course, everyone was unaware what was going to happen. They're into their new house. Now the prices come down, but they have to go. That they have to sell that home. So I'm saying, like, for all you buyers out there, especially you first-time buyers that are sitting there waiting for this magical dream home to come on, there are so many opportunities out there for you to get into the real estate market right now, and just do a little bit of work or wait. Like, they're all livable. You know, they just don't have like new flooring, new windows, new kitchen, new bathrooms, you know, but they're livable. Go in, get a great deal, and do some work over time and have a solid investment and a place to live and be in the game. But it was surprising to me knowing how many first-time buyers are out there that aren't taking advantage of these opportunities of these vacant properties that I'm seeing in Ottawa everywhere.
Or do you think that because with 75% being vacant, obviously it's hard to say whether they, you know, the reasoning behind it, but there's so many vacant. Do you feel that that there's still room for prices to decrease in Ottawa, or do you think that?
Absolutely.
Yeah, okay.
And it's funny because I wouldn't have said that before, but with the way that the new ones that I'm talking about, where the multiple offers are happening, like these homes are in my mind, they're 50,000 less. They're pricing them 50,000 less than what they should have. Like, for example, a townhome listed at 500,000 that would have been maybe 625 last year. Okay. Listing at 500, 5 offers in the first 12 hours, sold for like just under 550, I think. So, you know what I mean? But the 550 is, I would say, is the value of that home.
Yeah.
So it's back to this, you know, it's the old strategy, new strategy. Mm-hmm. Which is the thing, because do you guys remember when the market started going crazy? It was $499.9 was the hot number for a townhome, right? Yeah. Every townhome was $499.9. Then all of a sudden, like, you know, months later, it was like $599.9 was a townhome thing. Then it was like $699.9. We're just like, what's going on? Yeah. Right. And then that was the peak and the cap, and that didn't last very long. But the $499 to the $599 was wild, and now there's a lot sitting at the $499.9. So the nice one comes at a $499.9. You've got another 70 townhomes out there that looked horrible that are priced at, you know, $545, $539.9 that started at like $575 a few months ago. You know, they're just, you know, no one's even looking at those. And that's what I'm saying. Like, dude, talk to your agent. And if you see something at $550 and it's been sitting for 90 days, go in and offer $480, $490 and see what happens. They're going to negotiate. They're not going to tell you to beat it because it's a low offer and they're insulted after 90 days on the market and the property's vacant. Just negotiate. If you don't want to come up as much as the seller wants, don't. But I'm telling you, man, like you can work, you can get, magic can happen for home buyers right now. You know, and something that I don't think is being taken advantage of.
The APSs I've been seeing recently have about 40 strike throughs on the price. It's like there's clearly negotiations happening. It's like, you know, I have to literally, it's like, where's Waldo trying to find the actual final sales price, because there's so many lines going through that section. But to your point, Greg, like as a buyer now, it's certainly not the seller's market that we were in over the last 2 years. Like, this is the opportunity where you can actually negotiate, you can put in your conditions. The last 3 APSs I've gotten all have conditions on them for inspection, for financing. Like now is a good time to actually go in there. And if you don't like what you see, you can still walk away. You know, you can get in the game, and if you get the deal, as you put it, that you want, move forward. And if something doesn't smell right, or if the price doesn't come to where you want, then, you know, there's no obligation to buy it. So
no. And here's another quick story. So I was in a multiple offer last week with one of our clients from the show. And it was very interesting because we waited a week. You know, we wanted to go back and see it. And, you know, they initially said, well, if we can't go this week, and I'm like, we got to go back, because my guess is that this is going to be sold if we don't go back and see it and submit an offer. They're like, okay, let's go do it. So we go and do it. We submit an offer under list with conditions. It's been on the market for almost 200 days. Okay. We submit an offer under list, which was 50 down from where it was listed at before. So we're under list. And then 2 hours before they're going to look at the offer, they get another offer. Right. And I'm like, okay, well, now we're competing, guys. And so we come up to what they're comfortable with, their max they're comfortable with conditions. And it's sold, no conditions, under list price. So it's still sold 10,000 under list, but it's sold with no conditions. Yeah. So there's lots of little ways you can deal with it, but we lost. Luckily, the same day we'd seen another one and we submitted on that. Right now we're just in the conditional period, but that one's going to go through. So they found the house and it's a super nice house for them. But yeah,
I'd love to see that statistic.
You'd love to what? See that listing?
No, I'd love to see the statistic of how many secondary offers come in after the first one. When things sit for so long, and then we're putting in an offer, and then it's we just got another. Believe it or not, after 90 days.
You know what? I've had it on listings of mine, like where I've listed a property and it's sat, and like you don't get anything in for 3-4 weeks, and you just. On that one day, one person hears that an offer is being submitted and they're like, well, shit, we don't want to miss out. And it's kind of that mentality again. And people, they start coming in. I've had it on a flip before. It's pretty ridiculous because you're stressed up until then. And then they kind of just like flood in. But yeah, it's funny.
What's the magic of the 24-hour irrevocable, right?
Mm-hmm.
Like, you ask the agent, are you guys actually going to push the 24-hour irrevocable? And then, most times they're like, yeah, the client wants to, we have it signed document. We're going to go for it.
And that's where like having a good listing agent as well for somebody, instead of selling a property on their own, is that an offer comes in with that 24-hour irrevocable, that listing agent is calling everyone that's come through the property over the last probably, few months, calling every realtor, seeing if there's any traction, because this is an offer now. And a lot of times this is able to drum up additional action on that property because of that. And whether it be just, again, representing their seller and doing the best in work in their best interest to get them the best offer possible. But I certainly find that all the time. And when people sell or list on their own, they don't have that database of who to kind of contact. And a lot of times end up leaving money on the table, even with having to pay commissions.
Greg, when you're out with clients on the buying side, how often do they see something they really like, but the response is, well, let's just, let's give it some time. Let's see what happens. If for that exact reason, like they love it, but maybe let's just see what else is out there. They're like 80%.
It was like that. It was like that all the time. And then it changed during, pandemic times, obviously. Now the last few months, it went fully back to that. Like since last September, that's all that it was. So, basically you had a lot of people no one was really pulling the trigger, media hype, prices are going to go down. The market's crashing, recession as well, getting so much information from other sources, family members as well, which is not necessarily a bad thing, but no one could really make up their mind. Now I'm finding that with people that I'm speaking with, especially for the first time, I'm just making it very clear. I'm like, watch the show. I'm like, here's the stats. I go, this is what I'm seeing. I've been in the business for a long time. I go, yeah, I just want you to be prepared to know exactly what's going on, so that, and I say, like, I'm never going to tell you what to do and what not to do. Like, I'm here to kind of help you through the process, and I'll voice my opinion when you ask. I go, but ultimately you have to make the decision on your own. And I think it's kind of the same as in any change in a market where something has to happen to the buyer a few times before they really go, oh shit, okay, I need to get off my ass and figure this out. Because if you just walk into it and win, a lot of the time you feel like you've made a mistake because of all the outside influence as well, right? You're like, oh, well, that was easy. Like, maybe I could have got a better price, or maybe that didn't work, right? So if you get in, you lose, and then it creates a bit of urgency, and you kind of understand, and you don't want to miss the next one. So it's starting to happen again.
Yeah. It'll be interesting. Like we said, it'll be interesting to see how this plays out. To your original question, Paul, of the rate increase this past week, of how we kind of see that changing things or impacting people. I mean, it equates to an increase of $15 for every 100,000 in loan amount. Fortunately, not like substantial, but it does add up. Once you've all kind of had all these other increases. The fortunate side is that they kind of are indicating that this will be the last increase for a while, and that they're going to wait, see how, kind of the ripple effect through the economy. So I think it'll be interesting to see how that does impact, borrowers, just debt levels, what they're able to actually cover on their debts and their mortgages, and how that plays out over a given period of time, because there's still been a lot of savings from, the kind of COVID, people not spending for those couple of years, that people still have excess savings that they've been, burning through, because maybe they're not making enough, maybe they haven't been making enough to cover their bills, but they've had these added savings from during those 2 years of COVID that they're now burning through those extras. It'll be interesting to see over the next few months how these, not just this latest increase of a quarter point, but just the compounded 8 increases will be on people's affordability. And we're seeing on the business side that larger companies have started laying off in the tens of thousands employees, whether it be, Google and Meta and all these in the 10, 15,000 employee range, because their cost of, they're seeing their sales dropping, or cost of borrowing on their debts they have for the business increasing, and they're already making changes accordingly. So I think it'll take some time for that to really kind of ripple out, but in the hopes that it does decrease, drop inflation, but it doesn't, but there is that isn't that big impact or strong impact of a strong deep recession or anything like that, just that it's kind of some short-term pain, and then kind of, I'm hoping, and then the rates start dropping. But I was speaking to a realtor this weekend about the increases, and he was saying that there was a property that they were offering on for $800,000, and short time ago, properties, all the comparables are selling at $1 million. The sellers are having to sell because their mortgage payments are up to $5,000 a month, and they just cannot afford it at all, and they just need out. And they don't care about taking a bath on it. They just need out because they can't afford those payments, and they don't want to go in a default or anything like that. So I think more and more stories like that will likely come out, especially when you've got vacant properties, so many vacant properties. How long can people carry 2 properties? They've obviously moved on, or they, builder, it's maybe new construction and they just haven't closed on it. I don't know. I think it
is going to be interesting to see the next little bit for that. Your comments and me saying what I'm seeing with all the vacant properties out there, it's wild. There's kind of a prediction. I was reading a new update on Mortgage Sandbox. I like that site. And they're predicting, with the trend of where prices are going now, that by December 2023, the pricing will be the same as December 2021. Exactly the same. I see that as a possibility, just the way things are going. I did a little rundown for Kanata this week quickly, or for the last 4 weeks. I don't have the visuals, as I mentioned, guys, just because I've been traveling. There's for town, I just did townhomes and I did rentals just to get a perspective. The average active listed townhome in Kanata right now is $711,000, 47 days on market. There's 27 listings. There's 5 that conditionally sold in the last week, averaging $639,000, 31 days on market, and 13 sold at $607,000, 21 days on market. So every week that I'm doing these stats, the trend is massively downwards. Actives versus conditional and sold, the solds are almost always below now what the conditionals are and what the actives are. And the thing that I'm most interested in seeing next month is if the conditional sales that are higher than the solds end up coming down to where the solds are now, or if they stay a little bit higher. You know what I mean? If January kind of becomes this, people got a good deal in January type thing, and it's intriguing to watch. And with the rentals, there's 57 active. Average active price is $2,571 with 40 days on market. And there was 34 rented in the last 7 days. The average price is $2,409, 37 days on market. So again, The rental prices are coming down almost $100, $150 on average in all the suburbs every time I'm doing these stats. So if you are a landlord and you need a certain amount to cover, or you're already losing, expect to lose a little bit more, I think, because the competition is fierce, unless your property is spectacular.
The something with the rentals, and you mentioned about kind of covering, it reminded me of from a colleague kind of asking the question of, can a landlord increase a tenant's rent? They had two clients that they were speaking with, or prospective clients that are currently renting, and their landlord's trying to arbitrarily, like mid-lease, increase their rent, because clearly their payments have gone up and they're now at a loss, so they're just trying to increase it. Those of you listening that are renters, or if you deal with renters, make sure that they know what the laws are. A landlord can't just arbitrarily mid-lease increase rents. And it's unfortunate that a lot of individual, like you're saying, 56 places for rent, like these are individual landlords. A lot of them have never rented out properties before, or really look into what's legal or not. But you cannot just, if you have something rented for $2,000 a month and they're in a 1-year lease, after 6 months, you can't just say, oh, we're increasing it to $2,200. So it's really, even after that lease is done and they're month to month, you can only increase based on the CPI. So those of you that might be renting, if you're going through the situation of your landlord is trying to just increase your rent, reach out to Landlord and Tenant Board. If you're a landlord and you're thinking of doing this, understand that you cannot legally do this and that you need to look into the Landlord and Tenant Board Act. But just, you mentioned about landlord being like underwater bid or vacant properties and all that. It just kind of reminded me of that. It's,
I wonder how many.
Yeah, it's good. Well, that's what we're here for, right?
I wonder how many rental units. Again, always wondering what these statistics would be. I have a lot of hypothetical statistics. I wonder what the stats would be for like number of rental properties that are in variable rates. Because I mean, all those, like every one of those landlords is certainly not cash flowing, you would imagine, based on the increases we've seen.
Yeah, I mean, I think it was something in the neighborhood of 60 or 70% of home buyers during COVID, when basically we're at a quarter point for the overnight rate, got into variable rate mortgages. And whether that was an ARM, meaning adjustable rate mortgage, where it fluctuates, or a variable rate where it's static, but everyone hit their trigger point on those variable rate mortgages. So Steven, that would have increased.
Producer Steve, I don't know if it would be possible, but I sent a basically like a reel basically of all the announcements from the PM, Bank of Canada. It was like a whole reel explaining like rates are not going to go up. It was like all basically like 4 or 5 different instances of people being like laughing at reporters for even suggesting the rates are going to increase. And here we are. But I think I said that in the Facebook group. I don't know if that's acceptable, but following up, thanks to those stats, Greg, we've been talking recently, or we mentioned a few times on the show about the impersonators. And I think that was about maybe 2-3 weeks ago, the people that were using title fraud and basically posing as the homeowners to list sales. Bloomberg released an article over the weekend saying mortgage and title fraudsters who impersonate homeowners and tenants have targeted at least 32 properties in Ontario and BC, investigators and official warnings suggest. So this said, let me just see here. King's investigations include the case of the Toronto condo owner, Mafi Yu. I think that was the one we talked about on the show, who discovered that their 2-bedroom downtown property had been listed and sold last year for $970,000 for someone using their name. And then it says this type of title fraud was once very, very rare, but it now seems like every other file that's coming in is a total title fraudster. So it's on the rise. Fraud is on the rise. Must be inflation.
It's on the rise, and the thing that's too bad is that comments like that are going to freak people out. Like, I got people asking me about it now, what they can do to protect themselves. So I think it's kind of a conversation that lawyers are going to have to prepare for big time. They're going to have to be ready to have an answer to them and how they're going to be protected.
So in that article, they and I wasn't reading, not the Bloomberg one, but there was obviously there's been a lot of articles about it recently. Something that I that I remember from a FCT presentation on fraud number of years ago. First Canadian Title, they are one of the major title insurers. Is for those, for fraudsters, they look for properties that do not have a mortgage on them, that are free and clear. Those are the people that they're targeting, because then they can sell the property and get all of the proceeds into their bank account and be able to take off with that whole like 900,000. And so one thing that they were actually saying, and for those of you that don't realize, like all of that information of whether you have a mortgage registered on title is actually public record. You can look it up to see if something's registered on title. You can't see what your existing current balance or payment or anything like that is, but you can see whether there's a mortgage registered on title. So what they were suggesting is actually, whether you're using it or not, but even, and this is where some of those numbers for the HELOCs are skewed, but that it's a good idea if you have a free and clear property to even put on like a HELOC registered on your mortgage, that whether you intend to use it or not, just having that registered on title becomes another layer or barrier that a fraudster is not seeing a free and clear property. They're seeing a mortgage registered, because a HELOC or a secured line of credit is a mortgage product, and that is registered. So you might have a limit of 500,000. You can have a zero balance. You're not paying any interest on it, but it is on title. And it does, for people that are looking for defrauding somebody, they are looking for properties that are free and clear. So I remember that being one suggestion that they had, especially for elders, for those that have older parents, because those are typically the elder community is always targeted, of, checking, maybe speaking to your parents, finding out what they have, to see about maybe putting, like registering a HELOC or something of that nature, where it kind of is a deterrent.
Great idea, man.
It's, and for those, for all those stories, like for anything where they've defrauded people, I mean, that's where your title insurance. So when you're closing on a property, whether it's be a purchase, refinance, whatever, you'll see a line item under disbursements with your lawyer, and you'll see title insurance. And I think Tim Hudak, the CEO of Rico, had a comment, and I think it's like $1 for every 1,000 or something like that, like in purchase price is for title insurance, like the cost of it. And it is protecting you, that should you're ever defrauded, that kicks in and basically covers all the legal, makes you whole, any loss in any capacity. There's other aspects too that title insurance covers, but it is certainly, I mean, every bank requires homeowners to have it, but it's certainly something where you want to make sure that it is on there.
Great info. That's the answer that everyone's been waiting to hear, David. That's true. Yeah. And that's a very good point. So I don't think a lot of people, and again, another misconception, right? People are going to hear about it. They're going to think that they're in danger, but they're not really in danger.
Yeah. I mean, it would suck coming home from vacation and, somebody else is living in your home. But
I mean, but to your point, it's like, it makes sense. Like it makes sense the way that they're doing it, right? The target is clear. And
have they, and Greg, this is on the realtor side, because I know one article was kind of suggesting it, of looking for multiple pieces of ID for people listing that maybe is kind of something that they're talking about for realtors.
And it might go that route. ID. It might go driver's license and passport or other type of identification. Like, I mean, we're not there yet
to that property.
Yeah. There's going to be something else. I don't know what that's going to look like, but I'm sure that's coming. Another thing, just quickly popped into my head, you saying that it looks like, I think it's the first week of April that sellers will have the option of disclosing what another buyer bids on their property in a multiple offer situation. I believe that's happening in April. There's a couple other things. I'll have more info on that next week. There's a few new rules coming into effect for real estate in Ontario.
There was some whispers of that last year, and I think we're all very pro.
It's happening.
That's interesting.
Totally pro. Totally for it.
We can find out some more info on that, and we can make that a topic for next week as well.
That will be my task.
Well, should we? Were you able to locate those mood boosts? Should we slide into them?
I have them. Yeah, we're good to go. I got 3. Let's see here. Number 1, if April showers bring May flowers, what do May flowers bring? Pilgrims, of course. Mayflower. Go Girls.
It took me a second there. It took me, and for me, just take a second on that one. I'm kind of surprised at myself. I'm a little disappointed in myself, is what I should say.
Yeah.
Number 2, I was wanting to tell you a cow joke, but you've probably heard them all.
Yes.
That one's a little easier.
Can't miss that one.
The simple-minded like me.
This is my favorite. Number 3, my wife asked if I could clear the kitchen table. I had to get a running start, but I made it. All the long jumpers out there, high jumpers. Thank you for listening. Make sure to subscribe if you haven't already. We're nearing that 1,000 mark on YouTube, which was kind of our goal leading into this year. So if you haven't already, make sure to subscribe, share with a friend. Everyone, if all listeners have one friend subscribe, we'll be buzzing. Also, be sure to nominate. We have been vote. Sorry, we've been nominated for the Faces Award for Podcast of the Year in Ottawa. Great job, gentlemen. So if you haven't already, you can vote once per day. And I think voting closes February 15th. So still a couple weeks left on that. And as always, we'll be back next week. Looking forward to it. Gentlemen, any closing remarks? Thoughts?
Nope.
Nothing at all right
already.
Now.
Great.
I've said it all. That was, I actually enjoyed that show. It was a lot of very good information for our listeners and viewers. I hope that they feel the same.
And always remember,
if you have any questions or comments, leave them below, or just give us a call if you want, like a private call, a consultation, just a conversation. Doesn't matter whether you take our advice or not. It's better to have some personal conversations with some solid questions and some solid answers from some great guys. Right, guys, we're great.
You're great. Enjoy the hot weather, Greg.
Thank you. I will.
Right.
I'll see you again next week. I'll be a little bit more tan. All right. Later.
All right. Deuces.
Thanks for tuning in, everyone. We hope you enjoyed today's episode. Please remember to like, share, comment, and subscribe, because we'd really like that.